Welcome to Matters Financial and Geopolitical from the Frontier. Thank you as always for stopping by. I hope you had a great weekend. We had quite a quiet one. Let me start with Malaysia's stock market. It raised a sharp loss after the unexpected Malaysia election outcome. This chart is from JS Blokland. And as I said in my previous email, I'm very bullish about Malaysia. I think the market's got it all wrong. It's a Zuma Ramaphosa type story. A Razak to Mahathir, and I'm bullish for Malaysia under the new version 2 Mahathir administration. The Ringgit weakened the most since US elections, roughly 18 months back, after Mahathir's surprise win. It is a buy as well. My article over the weekend took the quote from The Economist, which said Africa looks more like Italy than China. Markets have certainly been moving around a lot of late. Everyone has been transfixed by the price of oil, with the benchmark Brent crude contract topping a 3.5-year high and $77 a barrel last week. President Trump, whose political raison d'etre is to expunge and delete the name of Barack Hussein Obama from the record, delivered a unilateral hard exit from the nuclear agreement with Iran, thus lifting oil prices. In fact, President Trump has flipped Obama's oil warfare strategy. You will recall oil prices touched $32 a barrel in President Obama's term, in part to bring a recalcitrant Russia to heel and neuter Saudi resistance to his JCPOA deal on its head. Trump, I suspect, is seeking to assist the Crown Prince of Saudi Arabia up the greasy kingdom of Saud pole, and the Kremlin is, I am sure, not complaining. Over the weekend we saw lots of comment about Rosneft as well. The US dollar has been strengthening across the board. Emerging markets bonds, which in late January this year touched a record low spread versus the equivalent US Treasury, just above 200 basis points versus 5-year US Treasuries, blew out. The spread now is at 275 basis points. Argentina, which incredibly sold a century bond just last year after dialing up interest rates to an eye-popping 40%, has capitulated and dialed up the IMF's Madame Lagarde. At this point in the cycle, the IMF's importance for many countries cannot be gainsaid. Turkey's lira crashed to all-time lows. Countries that had been flying by the seat of their pants are now being caught with their pants down. This has all the ingredients for baking a good old-fashioned crisis. The signal in the noise is the yield on 10-year US Treasuries, which yield is around 3%. If we move to 3.5%, we could see a further round of bloodletting. Sub-Saharan African governments have tapped the Eurobond markets for more than $15 billion so far this year, which is a record haul for any year ever, and it's not even June. The IMF, in its latest Africa update, judged 6 countries to be in debt distress: Chad, Eritrea, Mozambique. Mozambique have lashings and lashings of natural gas, which means there is a pathway out of this. Congo Republic, South Sudan, and Zimbabwe. In Zimbabwe's case, there is sufficient goodwill for Zimbabwe to exit their current impasse. Interestingly, the IMF's ratings for Zambia and Ethiopia were changed from moderate to high risk of debt distress. In Zambia's case, Eurobond yields are nudging double digits, and President Lungu is resisting the only option that is really available, which is the IMF. During the IMF's release, its Africa head said, the question I ask is, why isn't a country growing at 6 or 7%? Faster growth is a panacea. In fact, after growing just 1.4% in 2016, a more than 20-year low GDP print, the IMF is projecting growth across sub-Saharan Africa of 3.4% this year. SSA aggregate figures are driven by the big three economies of South Africa, about which I'm constructive because of the swing from a scenario of a vicious Zuma discount to a Ramaphosa premium, Nigeria and Angola. All three countries are bouncing off the bottom. The proof of the pudding will be in the eating, however, and the sustainability of the rebound. The IMF expects that income per person will shrink in all three in 2018 for the fourth consecutive year. That means the average individual is empirically worse off for the fourth consecutive year. The Economist correctly concludes there is reason to worry then when the IMF says that regional growth will hover below 4% for the next few years. Since populations are rising, income per person will creep up by barely 1% a year. That makes Africa look more like Italy than China. Better keep praying. The Daily Maverick cited Nigeria as an example. For example, Nigeria, Africa's largest economy, is home to almost 200 million people. Its population is growing at 2.61% per year, with a median age of 18. But Nigeria's economy is set to grow by just 2% in 2018. The implications of this are nothing short of disastrous. Bloomberg's annual misery index places 6 African countries in its top 10 most miserable countries globally in 2018. Last week, when delegates were asked at the Moody's Investors Conference in Lagos what they thought were the biggest risks for African borrowers, they were not worried about external shocks so much as homegrown ones. Africa has fully loaded the balance sheet, notwithstanding a record-breaking Eurobond raise in 2018. It's as plain as day that the current scenario is a little like Argentina's century bond moment, a last hurrah. African governments need to improve their ROI because envelope space could evaporate momentarily and in a blink of an eye. Investors are demanding the most extra yield to own dollar-denominated emerging market sovereign debt versus benchmarks since early 2017, which reiterates the point I was making. And here we see returns to date in financial markets from Chico. Home Thoughts, Willie Roberts, who passed away, was described by Judy Wakungu as a man who changed the landscape of conservation in Kenya, a giant on whose shoulders we all stand. I had the good fortune to visit Sirikoi a few years ago and interview Willie Roberts, and he described his journey from Lake Baringo to Lewa, and it's an extraordinary story, and I urge you to listen to the interview if you have time. Inside Africa, 25 of Africa's most amazing places to visit. Gadi pans in Botswana, saltier than a salt shaker and seemingly forever desolate and dry. That's until transformational rains come, bringing an onslaught of greenery and wildlife. Mount Kilimanjaro, Tanzania. Breathtaking views and altitudes come with one of the most coveted hikes in the world. This is a photograph of Victoria Falls, the smoke that thunders. Members of the Kololo tribe living in the area appropriately called it Mosi Owatunya, the smoke that thunders. On that note, I discovered that the snapper was being eaten during Byzantine times. This was a white snapper, lunch courtesy of Juma, on the 1st of January this year in the South Coast. Charles de Gaulle, the cemeteries are full of people who thought themselves indispensable. They vanished into oblivion, and their places were taken by other and better men. I like this photograph by R. Heathcote, capturing the unmistakable silhouette of a tiger. And then this caught my attention as well. Manned mission to Mars could be set up for 12 years from now, experts say. Let's move on to political reflections. Millions of voters in Burundi will go to the polls this week in a referendum that could allow President Nkurunziza to stay in power until 2034. After a campaign marked by allegations of widespread human rights abuses and hate speech, members of Burundi's divided and weakened opposition see little chance of any serious resistance to Nkurunziza's efforts to secure his future at the head of the impoverished state. Burundians are being asked to vote yes or no to a proposal to extend the president's term from 5 years to 7, which would allow Nkurunziza, who has been in power since 2005, to rule for another 14 years when his term expires in 2020. I wrote a piece in 2015, Eyes on Burundi. I was talking about the spillover risks. There has been some spillover to Tanzania and Rwanda, but so far it seems contained. It's just a political witch hunt. That's the line from Martin Scorsese's movie Casino, which I thought was amusing. Iran's supreme leader trolls Trump with photo of himself reading Fire and Fury days after Trump ended the nuclear deal. D.H. Nexon, last night my wife, who knows a thing or two about the technical side of non-proliferation, made an interesting point. The JCPOA is not a flawed agreement, it is an excellent agreement. Shia cleric Muqtada al-Sadr takes an early lead in the Iraq election. You can't count that man out. He's been a thorn in everyone's side for quite a while. Ivanka Trump is in Jerusalem for the embassy opening as Gaza braces for bloodshed. And a Palestinian is seen here protesting against the US embassy move to Jerusalem, running through smoke from burning tires during clashes with Israeli forces on the border with the Gaza Strip. Currency markets, euro-dollar is at 119.70, dollar index 92.40, Japanese yen 109.54, Swiss franc 0.9984, the pound 135.75, the Australian dollar is at 0.7549, Indian rupee 67.335, South Korean won 1067.87, the Real 359.95, Egyptian pound 1782.37, and the Rand has firmed up finally to 1218.68. Dollar index, I'll put up a 3-month chart here. I'm sidelined, but obviously still long with my 88 stop. Euro dollar, I think, could get as high as 120.60 on a dramatic move before it falls back. Britain's property prices dropped the most in nearly 80 years, according to Bloomberg. Computers drive trading in coffee and cocoa markets is an interesting article in the Financial Times. Specialized markets such as cocoa and coffee are becoming the next frontier for the waves of buying and selling generated by algorithmic trading, which has long since carved out a presence in currencies, equities, and interest rates. The trend enjoys a powerful tailwind thanks to the money flowing into systematic macro and an array of quantitative funds which are seeking new opportunities to boost their returns, triggering dramatic shifts in prices for coffee, cocoa, and sugar, sparking concern that these commodities are being divorced from their fundamentals of supply and demand, traders and brokers say. People are looking for more niche markets to deploy that money, said Michael Coleman, who manages a Singapore-based $140 million discretionary hedge fund, merchant commodity fund. Many of the computer-driven strategies are searching for risks and returns uncorrelated with other financial markets. Well worth reading. Of course, cocoa has surged this year after a steep sell-off the previous year. Brent crude seems to be coming off the top. I said it looked a little bit heavy. WTI crude oil below $71 at $70.28. OPEC suggesting it can offset any shortfall from Iran sanctions. Gold 1320.50. We bounced off those lows. We found some support at 1308, 1309. Emerging markets, the Argentine peso posted its worst week since 2015 last week. Let's go to Africa. Angola newspaper Expansão had an intriguing front page cover this week. It declared every Angolan owes $745 to China. It also listed debt to other countries, but debt to China was more than 7 times what's owed to the next creditor, Israel. By some estimates, Angola owes some $25 billion to China. Since resuming ties in 1983, Angola has taken $60 billion from China in loans and investments. The issue for Angola isn't just that it's borrowing a lot from China, it's also the nature of the debt. As Africa's second largest oil producer, Angola's agreement with China is such that it uses oil to pay off the debt rather than selling on the open market and generating cash. That is all well and good when oil is $100, but it's risky when oil prices fall. It has caused a liquidity crisis in the recent past, as well as spikes in inflation. Meanwhile, as the end of the first quarter, about 55% of Kenya's external debt was to China. The concern is Uhuru Kenyatta's government and others before had been naive in their lopsided dealings with the Chinese, despite infrastructure, construction and other benefits. Many African leaders have also been endeared to China by the latter's deep pockets, most of whom have grown wary of lectures from their traditional donors from the West. China's cash comes with no strings attached. Sub-Saharan African frontier market economies, international sovereign bond issuances, this graph speaks for itself. A fiscal crisis in the Republic of Congo leaves citizens in a struggle to survive as wages and pensions dry up. GDP there is above debt to GDP is above 100%. South African all share turned positive, up 1.82% year to date. Dollar versus rand. Look at the 6-month chart. That was a great opportunity above 12.50 to buy the rand. Nigerian all shares up 7.27% year to date. The Ghana Stock Exchange is up 33.96% year to date. They issued $2 billion of Eurobonds on Friday. Tanzania cancels the license of Barrick Gold and Glencore over their nickel project in northwestern Tanzania, and this was among 11 retention licenses cancelled by the government under the Mining Mineral Rights Regulations of 2018, which were approved in January. 2 British hostages in Congo have been released. This was announced by the Foreign Minister Johnson. And this is a photograph of one of the rangers who was buried and who unfortunately lost his life. TPG's RISE Fund makes its first Africa investment. The RISE Fund, the impact fund run by private equity group TPG Growth, has made its first investment in Africa, leading a $47.5 million deal to buy an unspecified stake in digital payments provider Cellulant. The deal also included Endeavour Catalyst, and Satya Capital is the largest involving a fintech company that is business only in Africa, according to the RISE Fund. Ken Njoroge is the co-founder and chief executive, so the new capital would be used to scale up the company's operations and expand into 2 more countries this year. The payment market on the continent is worth anywhere between $20 and $40 billion over the next couple of years, while all of the fintech players in the market currently collectively generate a little shy of $2 billion, he said. I said I was not surprised Cellulant had attracted the attention of a major private equity group, noting that Mr. Njoroge had built a successful business, grown it organically, and delivered for big corporates across the continent. Private sector credit growth touched a high of 25.8% in June 2014 and has averaged 14% over the last 5 years, but has dropped 2% levels since the capping. That's from Saiton. The yield on the 10-year Eurobond remained unchanged at 7%, while the yield on the 30-year Eurobond declined by 10 basis points to 8% from 8.1%. The Nairobi All Shares up 3.24% year-to-date, but has fallen 10.08% since hitting a record high on April 5. According to the Business Daily, listed companies are sitting on a pile of cash worth about 815 billion shillings. The NSE 20 is down 2.95% so far this year. I wish you a tremendous week.